Broadcast. Want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Wednesday. So much for a wild Wednesday. Not much there. April 27, 2011, 4 p.m. Eastern. Gotta tell you, what a day. What a day. You call it the burn your ass key to the dollars. Oh my goodness. Ben Bernanke. I'm trying, people. I'm trying. It's a bad connection. Not delivering any cause for concern on inflation. Transitory at best. Does not see inflation expectations becoming anchored. And based upon that statement, the dollar was an easy trade to the downside. Once that statement came out, listen, obviously we jockeyed a little bit back and forth. We made a nice run. The dollar came in. It rallied a little bit into the rate decision, the statement. And then basically after that, the dollar just kept going down. And it was fairly easy. And if you read my posting on Voice of Forex, remember my fan page, that's all I'm going to be focusing on. Fan page and Facebook is Voice of Forex. And Twitter, Voice of Forex. As I've said, nothing changed. And you know what? It could have been a lot worse. Listen, we were short the dollar. And so certainly got saved. But obviously got long the dollar. Not so smart. On looking for a somewhat of a reversal. I mean, I thought some of the statements were okay. Meaning, I thought Bernanke did a good job. But I thought one of the statements he made regarding extended period, everyone's jumping on the fact that he said three meetings. But no one spoke. The comment he made after that was, but you never know. And, when we start seeing oil prices spiking even higher, when the FOMC finally agrees, which they don't right now, that maybe oil prices and higher prices are going to become anchored to the consumer, meaning, you get used to $5 a gallon gas, which is disgusting, but you do. And then they're here to stay. So that's not good. And again, the pass on through he spoke about, and he tried to maintain he's worried about inflation, but he's standing pat on the fact that it's transitory. He sees prices coming down. I don't agree with him. And that's where I think the big difference is. They're not concerned more about geopolitical supply side situation. And he did speak about the demand from Asia and third world countries. I thought that was significant, but again, no real policy change, no language change, nothing. And it will be a soft landing in his opinion. Rates will not be exploding. His first way of slowing down the economy, if it gets too hot, is to stop the Fed from repurchasing mortgages and CMBS and treasuries that mature. So they get cash. Right now they're reinvesting that cash. The question is, will they continue to do that? And the answer was yes. But that looks like their way of tightening policy. So instead of raising rates from 25 basis, 0.25, they're going to just stop purchasing with the expiring treasuries. Now, I think that's a joke. I don't think they're going to do that. I think he doesn't know the pace of that he's going to have to increase rates and take away the stimulus and the punch bowl. And I think he seemed to be equally concerned now with rates and, employment and inflation. At least that's the way my take on it was. Other news today, we did have inflation numbers out of Australia, much higher. Aussie to the freaking moon, Alice. Again, this is the only part of the day we got wrong. Dollar down was easy in Asia last night. Absolutely. Dollar continuing its downward after the press conference. That's where we pretty much I got it wrong. But other than that, still a good day. Even though we got nice losses on this Euro short. I'm down about 57 pips. But I do think the dollar rallies a little bit tonight. I do think we do get another continuation of the dollar move down, but again, I just don't see it a runaway train at this point. But obviously, based upon the close of the stock market, of the dollar index, the only way you got to be is short dollars. Now, that's not to say we don't get up to 48.50, 49 on the euro dollar, we could reverse. Sure. But I think we got to play the long side first. And again, look to get out of our dollar longs right now, relatively unscathed, hopefully. I think we got to pull back on euro dollar 147.50. Cable comes back to 166. Aussie 108.40. Easy. So, it depends on your levels, but, we didn't really get this meltdown in the dollar. It was just a slow, steady, cuts. Durable goods in the U.S. pretty much not very good, up 1.3% in the core side. Military, apparently a big issue there. And speaking, military stopped a lot of orders, and without military, it was up like 3.5%, which is much better. But now, regarding the military, I think it's very important for everyone to know that we do now have a new Secretary of Defense. I think that is disgusting that Leon Panetta is going to be the new head Secretary of Defense. What's up with that? The guy is a politician. The guy has been the CIA director now for 2.5 years. He had to have a tutor assigned to him from the CIA just to teach him everything. And now we're going to make him Secretary of Defense? I mean, should Congress even believe or agree with anything this guy says regarding cuts in the military? I think it's a joke. I love the fact that Petraeus is going to be CIA head. I like that. He's great with covert operations, but who's going to take over Afghanistan for him? Wasn't he the one that was leading the whole push? And now we're going to take him away from the front line and put him into CIA? I mean, it seems to me there's like this is a major move in the military. This is to think that Leon Panetta is going to be our Secretary of Defense going into 2012 really is scary, I got to tell you. We're looking at the dollar index on the daily chart. Once again, we're in a free fall. We've been saying it over and over again. The only support level we see is in the 2008 level. Actually, 2007. Yeah, 2008. And I got to tell you, I don't know where it is. I mean, you see here, this is the line where the dollar index is trading right now. This is in 2008. This is a daily chart, I guess. 72.50. A little bit of support. But other than that, there's nothing on the 72.50 down to 71.80. So, this dollar index is toast. Now, again, I'm not looking for a straight line down tonight. I think this dollar index could bounce a little bit. And, of course, obviously one of the other big news of the day, we did have S&P downgrading dollar-yen, or the yen, outlook to negative. Dollar-yen reversing significantly. If you listen to my show, my YouTube video, you know that we pretty much looking to buy that dollar-yen cheap. Big outside candle, baby. Big. I am long dollar-yen. Abso-freaking-lutely. Look at that outside candle. Took out the low, took out the high. The only thing that scares me is the fact, of course, that Bernanke didn't really deliver any hawkish tone. I was dead wrong. I'm the first one to admit it, but we still made money today, so who gives a crap? I'll be wrong any day of the year. I don't care. I care about making money. I'm embarrassed the crap out of myself. But again, if you're a premium member, and those of you that didn't take advantage of that free Wednesday, I don't know, you're an idiot. But again, this dollar yen, I think, reversed nicely. We're long it now. Nice buy on pullback. Euro dollar. Some of the numbers out of Europe were not very good. Industrial new orders only up 0.9%. Revision was higher, but still not a very good number there. GFK consumer climate 5.7, a little lighter. London numbers were pretty much in line. And the Australian number, 1.2% on CPI. Pretty decent. Now, again, I mean, we're just in to the moon territory. We've now taken out this channel line that we drew for you the last couple of days. We are right at it. You have another channel line here we took out. But we're damn close to this one. And once again, once we took out this whole downtrend pattern, it was off to the races. It's just so hard to be long a currency that, in my opinion, is fundamentally flawed. But the charts don't lie. We are short right now, looking to get long, and then looking to sell it higher. So it's going to be, dollar up, down, up. That's the way I'm playing out tomorrow. And again, the S&P, it's just gone. Gone like the wind. Nice closing strong, 1356. You got to measure the move. 1340 down to 1296, roughly. 45 handles, tack it on to 1340. We're talking about 1385. So we got 30 handles more. Gold, silver, gone like the wind. Gold, wow. What a reversal. But again, back to this euro dollar chart. What? What are you talking about? Oh, Panetta. Oh, you didn't know that? Yeah. You kidding? You know me, I'm a news junkie. But no, that was this morning in the New York Times. Confirmed, though, throughout the course of the day. Oh, we're in trouble. We're in big trouble. Big, big, big trouble. So again, this euro dollar daily chart, I guess at this point again, you measure the move, 145 down to 142, 141.50. Swing it up, 350 pips, people. And we're talking about 148.50. That is the line in the sand. Oh, baby. And that's where we're looking to get out of our longs and look to get short. 148.50. Cha-chinga! Dollar yen, I think again it bottomed. Dollar yen. And, looking at daily chart, I like it. Stop today's lows. Absolutely. Didn't hit my fib level that I was looking for. I was really looking for that 81 level. Didn't get there, but it was a nice short after the Fed, that's for sure. Dollar Canada. I still can't figure this one out. But to me, it's rolling over. It looks like a dead short. Euro Canada closing strong. Houston, I have a problem with this trade. Getting hurt in that. Euro Swiss, by the way. Take a look at this move in Euro Swiss. I love this trade. I think this follow through. I think it's an easy trade. Big outside candle on the daily chart. Even dollar Swiss up big from the lows. Got up to 129.37. But big candle there. A nice outside candle there. If anything, dollar strength, it's going to be against the Swiss franc. Stock market breaking out more. Stability. But you look at this outside candle in Euro Swiss. I think we easily continue up to 130. Maybe even 130.50. I like that trade. Aussie dollar. At this point, I just can't buy into this. At this point, you got to be short. Sorry. I'm short right now. But we're going to get out of this thing before triple roll. Aussie dollar, again, pull, flag, pull, flag, pull. Maybe get another pull extension up to 109.50, and we look to get in to the short side. Certainly want to get in long side. But this is just parabolic at this point, in my opinion. I mean, we're talking about 1,000 pips in a month. I mean, come on. Enough is enough. We've gone through 102, 110. This is parabolic. We're extended. I mean, let's get serious here. And again, one of the things that you look at too is the Fibonacci extension. Where is it? where'd it go? Here, from 94 down to roughly 80, 50, flip it up, and you're right about 109. So this thing is just getting exhausted. I think enough is enough. Yes, you had gold up. Yes, all the metals are up big. But I just think that this thing is so extended, it's getting retarded. New Zealand, on the other hand, I think, obviously we have a rate decision coming up in 45 minutes. I think it's going to be subdued, but you never know. I mean, maybe this New Zealand dollar is a good hedge. Long the Kiwi, short Aussie. Because certainly there's a lot more catch-up that New Zealand has to do. Certainly their country is going to have inflation. Certainly you would think that they're going to have to raise rates a lot more in the future as they recover, assuming there's no more earthquakes, of course. But you look at this daily chart, nice outside candle. We managed to get out of some trades at 80.50 on the bounce, but still. Actually, it's a bad tick. My bad. Right now, New Zealand's trading 80.73, so bad data coming out on that. It's not a reversal. 80.73 is almost a new high. Closing decent, but tired. Very tired. We've come a long way, baby. Sorry, that's a fib, but we got this whole channel line we hit. Let's look at that dollar Swiss. By the way, as far as tonight's trades are concerned, we do have, again, New Zealand rate decision. Their statement's going to be the key. I think they're going to talk about, again, the disaster in Christchurch and the need for more of an accommodative stance, but ready to raise rates as soon as they deem necessary. Monster doji on that dollar Swiss. Monster. We also get a ton of data coming out of Japan tonight. We have monetary policy statement as well. They're probably going to increase the size of the rebuilding effort. I think that would be viewed as a negative for the yen, just because S&P just put them on watch as far as their outlook. More debt can't be good. Tokyo CPI should be interesting. Up 0.2 is the estimate there. Household spending is supposed to collapse 6.6%. I think it's a disgusting number. Industrial production preliminary negative 10.5, a disgusting number. So you could easily get a dollar rally in Asia tonight based upon these weak numbers coming out of Japan. Absolutely. And your yen could come in. Now things could reverse in Europe, but for Asia, I'm looking to be long dollars. But again, team, I'm getting out of this Aussie dollar into 5 o'clock. I'm not paying triple roll. No way. No siree bob. So again, this dollar Swiss, I think it's a nice little doji. Again, it's extended channel trade. It's at the bottom of the range. Broke through it. But again, wedging to the downside. Monster, ready to coil and explode. Again, I just don't understand. If everything's okay, why is this a safe haven play? You would think the Swiss would be weakening in a stock market going up environment. But this thing just keeps going up. Sorry, that's the Aussie again. New Zealand, we did. Let's look at Euro yen. As far as in Europe, by the way, we do get numbers coming out as well. We got European German unemployment, supposed to be down 33,000. And then, of course, U.S. GDP, baby. 1.9%. The Fed did lower their expectation of GDP. A notch, not so much. And we get weekly unemployment claims supposed to be 392. Pending home sales supposed to be at up 1.6%. And that's it. Pretty much. Again, a lot depends on the stock market. And the screen is frozen. Again, look at this S&P chart. It looks good. To the moon. All right, everyone. Team, stay right here. We're going to do TradeRex right now. Right now. So, again, if you have any questions, feel free to email me at info. Again, I'm sorry none of you took advantage of the free Wednesday, you jerkies. Andrew Spanton, Global Markets Radio, the only voice. It didn't go as I planned, but you know what? My people made money. The only voice you'll ever need who truly loves to make you money. Have a good night.